Is trading gambling? Kevin O'Leary of Shark Tank seems to think so. He recently came out and said, trading is completely gambling and the only way to invest is to invest long term. And that is not true. I'm here to prove why he is wrong. Alright, so let's start off with this easy example. Assuming we have a fair coin here on the left, and of course with a fair coin, 50% chance heads, 50% tails, and if you do get it right, you get $5, but if you get it wrong, you lose $5. Would you play this game? I wouldn't, right? There's no chance of ensuring that you remain consistently profitable at the end because everything is even, 50%, 50%, plus 5, negative 5, right? So you wouldn't want to play this game. So that was gambling. But what about now? In this coin, there's 80% chance you have heads, 20% you have tails, and the payout for getting heads is $9, yet the payout, you lose $1 for getting tails. Would you play this game now? I will play it 24/7 and I've played it for the past few years. I've been trading every day. And let me explain why. So here is a simple probabilities formula. Expected value equals the sum of x times probability of x. So in the previous scenario, 80-20, we have $9 payout, which is 80% chance it will hit. So you multiply those two, you get 7.2. And the other option is -1, you lose $1, 20% of the time, you multiply those two, you get -0.2. So what this means is that overall, that means in the long term, you're making $7.2 while only losing -0.2, and that your sum is $7. Now, here is a quick example of the 50-50 fair coin we talked about in the beginning, right? You will gain 2.5, but you also lose 2.5. So long term, you're at 0. So the key here, distinguishing between trading and gambling, is that gambling, you have no control over, but trading, you will be able to change the probability and the payout to make sure you're long-term profitable. It ensures that you are consistently profitable long-term and you're not only waiting for luck. And here is a real trading example showing how the probability of a success of a trade is proportional to the quality of its setup. This trade, Etsy, we traded live. We actually traded this setup live on our channel. You can find the video later on the channel. We traded it in real time. But now we're going to give you a summary why this was a 90-10 setup and why we made 4K on this trade alone. So first we look at the daily candle above on the daily chart. On the daily of 112, before the breakout of all-time highs, it was already a bullish engulfing candle. As you see on the minute chart more in depth below. And as expected, before breaking all-time highs, it consolidated right at that level as you see with the red line and the blue line. However, once the minute candle closed above the previous all-time highs with high volume, that gives us a lot of confidence of continuation. And that's why this is a 90-10 setup. Once the minute breakout happens with high volume, there is a very, very small chance of it being a false breakout. Of course, it can always be a false breakout, but with this, there's 90% chance of continuation and only 10% chance or even less of breakdown. So, to summarize, basically, we can change the probability of the coin by finding good quality setups through technical analysis. And this is how we can change the probability of a fair coin in our favor, through identifying quality setups. So now the second part, how can we manipulate the payout of the coin? So instead of +5 and -5, we have +9, -1, or +8, -2, or +7, -3. How can we manipulate the payout? We can manipulate it by managing risk to make sure our losses are small while maximizing the payout. Here is how we do it. Since our strategy is to trade breakouts, it's already assumed that if the setup is successful, we're going to make a lot of money, such as this break of all-time highs. Once it breaks all-time highs, it's going to continue for quite a while. Now, how do we minimize losses? As mentioned earlier, there's always a chance for even the best setup to fail. Shit always happens. Nothing is certain in trading. And that's why we manage our risk to minimize our losses. Even when setups fail, we don't lose a huge amount. For example, for this setup, in the small chance that it does fail, there will be a false breakout. So once it does show a false breakout candle, for example, it flushes below our consolidation period, we would exit exactly at our consolidation period because we know if it does false breakout, it's not going to break out anymore. There's no more reason to hold down this position. So we can cut it loose as soon as it fails. So basically, by using stop losses and identifying key levels, once we do see a false breakout, we can cut the loss early. Just even we're still going to lose. Don't misunderstand that. But we're only going to be losing very little. Meanwhile, when it does break out, when it is successful, we're going to make a lot more money. And that's how we manipulate the coin payouts to 9 and 1 instead of 5 and 5. We're 8 and 2 instead of 5 and 5. So to summarize why Kevin O'Leary is wrong and that trading is not strictly gambling is because we can control probability through looking for good setups. Also, we can control the payout by managing our risk, making sure we let our winners run and we cut our losses early. These two factors allow us to essentially count cards in the casino by shifting the odds in our favor. And thus, through math and not luck, we can ensure that our expected value in the long term per trade is positive. This way, we don't need any luck at all to make money. This is determined by mathematics probabilities. So that's it, guys. This is a very simplified video explaining why trading is not gambling. So if you like this video, please hit the like button. It helps me a lot. And also, if you want to see more videos from me, whether it be live trading, trading academy, or watch lists, any type of these videos, make sure you subscribe and turn the notification bell on so you can be notified whenever I post a new video. Thank you so much.